Picture this. The year is 2008. Markets are in a total free fall. Banks are teetering on the edge of collapse, and millions of people are losing their homes, their jobs, their entire life savings. It's just absolute chaos. But, behind all the headlines, a very different story is playing out. A small group of people isn't just surviving this crisis, they're actually getting richer because of it. So how on earth is that possible, and what does it mean for the rest of us? Let's get into it.
This leads us to a really uncomfortable question. What if these massive economic collapses, what if they aren't just random, unfortunate accidents? What if they are, in fact, predictable events that create these huge opportunities for a select few who know exactly how to play the game?
You see, to really understand how this all works, you've got to realize that a crisis isn't one single thing. For different people, it creates two completely different realities.
Okay, let's go back to 2008 for a second. On one side of this story, you have this number. Over 8 million Americans lost their jobs. Just let that sink in for a moment. That's not just a statistic, right? That's millions of families facing utter devastation.
And the pain didn't stop there, not even close. Nearly 10 million homes were foreclosed on. I mean, people who had worked their entire lives for a little piece of security just saw it all vanish. Retirement accounts wiped out. For most people, it was a complete and total catastrophe.
But then, here's the other side of the story. While everyday people were facing ruin, the very institutions at the heart of the crisis, they were getting trillions of dollars in government bailouts. A safety net appeared all right, but it sure wasn't for everyone.
And this brings us to the most crucial question of all. In any market, for every single person selling, there has to be someone buying. So if millions of people are panic selling their stocks, their homes, all their assets, who's on the other side of that deal just scooping it all up?
Now, here's where it gets really interesting. If you think 2008 was just some kind of one-off fluke, well, you'd be mistaken. When you zoom out and look at our economic history, you start to see a very clear, very predictable pattern emerge.
This timeline just lays it all out, plain and simple. Look at this. 2008, the market crashes. A couple of years later, the wealthy are on a shopping spree, buying up assets for cheap. Now, fast forward to 2020, a pandemic hits, another crash. And by 2021, the market is soaring to record highs and the top 1% have gained trillions. It's the exact same cycle. A crisis happens and it's followed by a massive transfer of wealth. So how does this keep happening? Is there some kind of playbook for profiting from all this chaos? Well, the answer is yes, and honestly, it's simpler than you might think. Let's break down exactly how it works.
Probably the best way to wrap your head around this is with a simple analogy. Think of the economy as a giant game of musical chairs. As long as the music is playing, everything is great. Confidence is high, everyone is investing, buying, and prices just keep going up and up.
And this slide just perfectly illustrates how the game is played. So step 1, the music's playing. But then step 2, a crisis hits. The music stops, and suddenly everyone panics. That's step 3, the scramble. People rush to sell everything, stocks, homes, you name it, at whatever price they can get. This is when prices totally collapse. And that brings us to the most important part. Step 4, the strategic player, who's been waiting patiently this whole time, steps in to buy those exact same assets for pennies on the dollar.
And right here, you can see the two mindsets side by side. When that music stops, the average person panics. They sell, and they often lose their life savings doing it. But the strategic player, they do the exact opposite. They stay patient. They use their access to cash and credit to buy everything at a huge discount. You see, they're not just playing the game better, they're playing a completely different game altogether. So what gives them this massive advantage? Well, for starters, during a crisis, governments usually lower interest rates to try and boost the economy. That means the wealthy can borrow money for way cheaper. They also have liquidity, that just means cash on hand, so they can afford to wait for prices to hit rock bottom. And maybe most importantly, they have the discipline to follow that classic investor mantra, be greedy when others are fearful.
And this playbook, it does more than just make a few people richer. It has these deep, long-term consequences that actively reshape our entire economy every single time a crisis hits.
The real-world impact is just staggering. This quote says it all. After 2008, while millions of families were losing their homes, huge investment firms were buying up those same properties by the thousands. Entire neighborhoods were basically turned into rental empires, totally changing the idea of homeownership in America forever. And the end result is exactly what you see on this chart.
Every single crisis acts as a kind of wealth transfer machine. As you can see, the wealth of the top 1% doesn't just bounce back, it shoots up to whole new levels. Meanwhile, the wealth of the middle class either flatlines or goes down, making that gap wider and wider with every cycle.
So all of this brings us to the final, and let's be honest, probably the most disturbing part of this whole story. Is the system broken? Or is it actually working in a way that we just don't want to admit?
And here it is, the uncomfortable truth at the very heart of all this. The system isn't necessarily broken. An economic crisis isn't always a bug in the system. For some, it's a feature. It's a clearing mechanism that efficiently transfers assets from the hands of the unprepared into the hands of the prepared.
So what this all boils down to is that the system has its own set of rules. It rewards certain things, like patience over panic and having cash on hand, that's liquidity, instead of being buried in debt. It rewards discipline over a lack of preparation. It turns out the real game isn't about doing well when times are good, it's about setting yourself up to thrive when things inevitably, and they will, fall apart.
And that leaves all of us with a final, very personal question. History tells us that another crisis isn't a matter of if, but when. So, when that music stops again, which game are you going to be playing? The one driven by panic or the one driven by preparation?